Every one of us wish that we own a factory that is going to produce goods and products every single day and we collect revenue on a consistent basis, right? What if I can tell you that we all can have an income factory that is going to generate cash flow as a product on a consistent basis? Sound good to be true? Well, let's talk about that. So I came across this idea of income factory by reading a book from Steven Bavaria in his book, which is titled as Income Factory. In his book, he emphasized the idea of building a diversified portfolio of income-producing assets that generate a steady stream of cash flow. This approach takes inspiration from the timeless wisdom of financial luminaries like Benjamin Graham and Warren Buffett, who have long championed the importance of investing in assets with intrinsic value. So what are the principles of income factory? Basically, you focus on income generation, okay? So primary objective of an income factory is to create a consistent and reliable income stream. This is achieved by investing in assets such as dividend paying stocks, bonds, real estate investment, trust, and other income generating assets like a rental property. Number two, diversification. So the income factory advocates for a well-diversified portfolio to mitigate risk. By spreading investment across different asset classes and industries, investors can reduce the impact of the market volatility on their overall returns. Number three, long-term perspective. Okay, so unlike short-term trading strategies that focus on market fluctuations that require you have to spend a lot of time reading the news, looking at the charts, understanding the resistance, the support level, and trying to pick the next bull run, the income factory encourages the long-term investment horizon. This patient approach aligns with the buy and hold philosophy, allowing investors to benefit from the power of compounding and ride out the market downturns. So, is it relevant in this today's modern investing world? Well, if you look at it, we understand that the income factor remains a relevant and effective strategy for several reasons. Number one, stability in a volatile market, right? The consistent cash flow generated by income producing assets provides stability during market downturns. This is particularly valuable in times of economic uncertainty, as the income factory's focus on dividends and interest shields investors from the full impact of the market volatility. Number two, inflation hedge. Income factory's emphasis on real assets such as real estate and dividend-paying stocks serves as a natural hedge against inflation. As the prices of goods and services rise over time, so do the incomes generated by these assets. Now, if we compare with these growth stocks, we realize that both have pros and cons. Right? So while the income factory emphasizes stability and consistent income, investing in growth stocks take a completely different approach. So growth stocks are characterized by high volatility and a potential for substantial capital appreciation. Here are some key points for comparison. Number one, risk tolerance. The income factory investors typically have a lower risk of tolerance, seeking a steady income stream, versus growth stock investors, on the other hand, are often more tolerant of short-term volatility in pursuit of high capital gains. Market timing. The income factory strategy relies on a long-term perspective, avoiding the need to time the market. In contrast, the growth stock investors may engage in more active trading to capitalize on short-term market movements. Income versus capital appreciation. That's a key, because the income factory prioritize regular income while growth stocks are valued for their potential to increase price over time. The choice between the two depends on the investor's financial goals and risk appetite. Well, finally, if we read this book from Steven Bavaria, he offers in his book the investors a time-tested approach to building wealth. Its emphasis on income generation, diversification, and long-term perspective aligns with the principle of value investing. In today's modern investing world, where market volatility is a consistent factor, the income factory provides a stable foundation for investors seeking consistent returns. While growth stocks offer potential for higher capital appreciation, the income factory's focus on steady income makes it a compelling choice for those prioritizing stability and long-term financial success. Well, there you go, guys. This is the income factory strategy. I'm applying this into my portfolio as well. You guys let me know how you guys are managing your portfolio. Are you going after the growth stocks, or are you investing just like the income factory strategy? Let me know, put your comments down below. And if you like this video, give me a thumbs up. And if you want to read this book, there is a link down there. You can click on it and buy the copy from Amazon. And if you are new to investing, there is a link for the Questrade account. You can start investing right away, and you can get free credits from using my referral link. Anyway, thanks for watching, and I'll see you next time. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.